The broadcast is now starting. All attendees are in listen-only mode.
It's 928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 20th day of November 2018. Hope you're having a great Tuesday, whoever you are, wherever you are. Hey, we're just glad you joined us today. Thanks for being here. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're glad to have you with us. I have a chart up of the S&P 500 Emini Futures, and we can see the trend down we've experienced the last few days of this week. And we're now officially in quote-unquote correction territory. I'll show you how that's not such a big thing here in a minute. But, so don't worry. I mean, if you're a trader, you're excited, the volatility is good, you're just making hay while the sun shines. If you're an investor, 401k, you're probably starting to get a little tense. Just relax. It will be okay. The indices always go higher, and if you're in an index fund, you're going to be okay. You might sell off the 666, you know, but it happened once. But then what happened? Well, some years later, about a decade later, we're at 2763. Because it is a best of breed index, the weak will always get kicked to the curb. Whether you're talking the S&P 500, the Dow 30, the Russell 2000, the NASDAQ 100. If they're not performing, they gotta go. Best of breed. Bring in a strong new bull. So, despite the pullbacks and the sell-offs and all the stuff, all the noise that you hear, however deep it pulls back proportionally and beyond, it will surge. I mean, look where we are now after hitting that 666 number back 10 years ago, 11, whatever it was, 2007, 2008. If you were there, oh, you remember. I got a little bit of news for you. Oh, if you can't see the chart, go to the home page at CFRN.net. On the right hand side, click the big microphone, follow the instructions. You'll be registered through the end of the month. This way you can listen to the discussion, you can see the charts, you can even participate in the discussion. Just use the chat box. Okay. Now, if cryptocurrency investors did not already have enough woes to deal with, there's a bunch of fake hardware wallets making the rounds. The Trezor lookalikes are manufactured cheaply in China, the land of knockoff electronics. If an offer looks too good to be true, though, it probably is. And traders, be advised, don't endanger your funds by storing them on a copycat wallet that just might be backdoored or just simply insecure. You would not entrust your money to somebody who has already cheated you by selling you a different product than you thought you were buying. We therefore recommend that you don't use this fake device, and that comment comes from Trezor, explaining how to tell the difference between the company's official holographic seal and that used on the imitators. Also, we know that trying to catch a falling knife can be dangerous. Cryptocurrency investors scrambling to sweep up cheap coins as Bitcoin holds its very own Black Friday sale. While the temptation to splurge on discounted crypto can be strong, Catching falling knives is a dangerous game. For those brave enough to try and time the bottom in this market, Crypto Twitter has some advice. A crash like this usually ends with a big bang and a quick V-shaped reversal. So far, we've only seen slow decline. Don't try to fight the trend, just wait for confirmation. And apparently they're talking capitulation. That's when everybody heads for the exit at the same time. There is blood in the streets. And if you're Warren Buffett, that's when you put your buying shoes on. When everybody's afraid. When everybody gets greedy, yeah, he takes off the buying shoes and puts on his selling shoes. He's not in crypto yet, but he's in fintech, so he's flirting with it. He'll be here soon enough. Respected analyst Willie Woo, you know Willie, got a little more technical, tweeting this: RSI reading more FUD than the February $12,000 to $6,000 crash. We have decent volume profile support in this. Very unlikely to slice through. If anything, the brave can go knife catching. No thanks, Willie. We'll wait. We'll wait for some confirmation. Now, of course, you pay for confirmation. Confirmation costs money. The further and further you get away from the ideal entry, the larger your risk. It's always interesting to check in on stable coins during days of extreme market volatility. What's particularly interesting is noting which way different dollar-pegged coins bend when their volume starts to stack up. At the time of writing, USDC and TUSD are trading at 1 to 3 cents over the dollar, while USDT is under the dollar, with each tether trading for an average of 97 cents. DAI, the stable coin that is collateralized using Ether, is sitting just under $1. Earlier today, a $50 million collateralized debt position had to be liquidated, and the Ether locked in the contract sold off after falling cryptocurrency prices left the DAI contract under collateralized. So are we in a bear market in the crypto? Yeah, I would say, are we beyond correction territory? I think so. The difference between crypto and the indices, okay? Crypto's not a best of breed index. It is what it is, more like the stock market than the indices and futures. Can they go to zero? Yes. Will the S&P ever go to zero? Not unless the world stops working. No, it never will. It will always go higher over time. So that's why if you know someone who's young today, they still have youth on their side, probably the smartest investment you can ever make is to start investing young. Time is your friend. Compound interest. Einstein said it's the most powerful force in the universe. And don't forget the rule of 72. If you don't know what that is, Google it. Hey, let's go look at the numbers. These are the numbers around the world. We're going to start with the Dow, which is currently down 402 points, closing in on 2% for the day. NASDAQ is off by 61, almost 1%. S&P 500 is down 31, that's a little over 1%. And the Russell 2000 is down 11. In the commodity basket, crude oil shed $2.85, trading 54.35 last. Guys, do you think we're going to see $40 oil I don't mean I'm talking 49, 49.99. Does that happen? $4 away. 4 1/4. Gold lost $1.40. At this time yesterday, gold had lost 40 cents. Today it's lost $1.40. Go gold. Trading 23.90 last. And the Asian markets. Okay, they got away with a mixed day yesterday. It's a big red Asia day today. Nikkei down 238 points at the close. That's 1%. Shanghai got clipped for 57, and for the Shanghai, that's over 2%. Hang Seng at the close lost Hang Seng sized numbers. Down 531 points. That's a little over 2%. The color of the day, boy, it is. It's wrapped itself around the globe. It's red in Europe. FTSE lost 53 points. DAX lost 178 points. That's 1.5%. The CAC's down 60. That's over 1%. Red day in Asia, red day in Europe, a red day here in the US of A. Big red radio day. It's the S&P on a daily chart. Okay, now really all we can see in this window is the sell-off, right? Let me do a little of this kind of stuff. This takes us back to the beginning of this year. Okay. So have we taken out these lows? No, we haven't. Have we had a very healthy pullback? Ooh. Yeah. Have we said for a long time we needed a very healthy pullback in order to keep this bull market healthy? Yep. Said it over and over. So from this swing low to this swing high, we're looking at this year, January to the most recent double top high. Price. Now it looks like it ripped right through the 38. I bet if we drill down and look at the day, we'll see some bounces there, but nonetheless, it found a footing on the 50% Fib retracement. Tried to bounce, couldn't do it. Took another dip, spiked to 62. This time it really got it together. You see, now you see what we did here, right? We challenged these lows here. Didn't challenge these, but we challenged these. So now where are we? Well, we just bounced off the 62% Fib retracement of the whole move. Okay, whole move. Now, what happened here on just the last leg up? Not the whole move. See, this goes back all the way to January of this year. That's a 1-year chart. These are daily candles, and we only go back to August. But we're only looking at this last leg up, because we know what we said about these numbers coming down. We've gone over it a number of times. We did a webinar, okay? And then we said, if this breaks way, if this gives way and we take out this low, we said very clearly in last Friday's webinar that then most likely price will drop to 26.38.39 and catch a bounce, but ultimately we probably go back to test the low, although we may not test the low, because some people rode this all the way up. They took it from 2600 all the way up to 2800. That's 200 S&P points. That's good money. About 10 grand. Did he say 10 grand? I don't know. Did he? Am I right or am I wrong? Maybe I'm wrong. But they want to ride that ride again. You ever took kids to Disneyland? I haven't, but I saw the National Lampoon Summer Vacation movie, so I know how they act. That's why I don't take mine. So people that wrote this, ooh, they want to write it again. And people that miss this, you know, if they work for a firm and if they missed this and they still have a job, then it's probably because the boss is their brother-in-law. All right. So as we get closer and closer, what will happen, the two groups of people that I just mentioned will buy their ticket early. And if enough people buy their ticket early, we won't even touch this number. At least not at first. We'll get close, buyers will swarm, and we'll take this back. I would think at least up to this 38. But if we can get through that, get here, then what do we have overhead? We have 100 points of room to run before we run into any major obstacles. If you missed Friday's webinar, go check it out. Today's show is going to be a little bit brief, guys. I got some things going on that I have to take care of. We'll hit all the high spots. Michael's coming right now, I believe, to give us a recap of what happened in the live trading room today.
Yes,
And
I am here.
on top of that, we had well, we feel very blessed for the evening that we had in the Logic 247, and I'll tell you a little bit about that, a little bit about the Concierge Trade Alerts. Concierge Trade Alerts went out later in the day today, and a couple reasons, not the normal reason that I just forgot. There were other reasons, but they did get out, and we're going to take a look and see how coming out at such a late time in the day, if any opportunities popped up, because sometimes I hear, oh, the CTA alerts, they go off during the night. What can we do different? I don't know. You tell me. Michael, good morning, and how are you?
Good morning. I am doing okay. Okay.
I kept trying to get in there and say howdy this morning, but I didn't get in there.
You didn't.
And I didn't say howdy.
And you didn't say howdy. But I did.
So let me just say howdy.
Howdy. I did see your telegram though.
For the
Top
double?
of the morning from the bottom of my heart. That's
Oh, I think that was from a different day, but you're not gonna believe what happened.
What happened?
I was just starting to really kind of like my new little Android phone, you know, my HTC. Now, can I be honest with you? I'm a shower guy. I'm a shower guy. I'm a clean guy. I like to be clean, but I like to stand when I get clean. You know what I mean? But yesterday I just felt tired and my back hurt, my neck. I don't know, staring up at the screen. I thought, you know what? I got this big old bathtub and this master bath. It never gets, I'm going to use it. I'm going to take a bath. So I take a bath, bubble bath. Nothing wrong with that. You can talk about that on Family Radio. Bubble baths are cool. Kids take bubble baths. Anyway, what kids probably don't do, because they're like pretty smart, they don't try to listen to music and podcasts while in said bath. Dude.
No.
Oh, Michael, it won't even come on.
No.
Well, and the problem was after it happened, it wouldn't turn off. And I knew that was bad. I'm like, oh my God, this is bad. It won't turn off. I need to turn it off and get it in the hose and then get it in the bag of rice. I know the routine. I know, but it wouldn't turn off. And then this morning, it won't turn on.
That's no good.
Well,
that's no good. Does it have a warranty?
Apparently that wasn't holy water it spilled into, so.
No.
Does it have a warranty? No, I don't think so.
Yeah, probably not, since you got it for $100.
Yeah. But it was a legal $100. Now, I don't want anybody to misunderstand. This was like some parking lot deal. I went into a store where a man earns his living, feeds his family, puts his kids through school, selling phones. And I didn't really need a phone. Certainly didn't need an HTC that I'd never heard of. But the fact that it was once $800 and I was able to walk out of the door with it for $99. I'm walking up the sidewalk towards where my wife's shopping, and she's like, "What is that?" I go, "It's a phone, honey, you know." And she's like, "A phone? How many phones do you need?" I'm like, "Well, I probably don't need any, but I do find them useful." So I killed this, man, I think. Because if the shape it's in now, I don't think putting it in the rice, I don't think it's going to dry it out. I think it's too late. I think I fried it. It doesn't smell like toast, though.
Well, that's good. That's good that it doesn't smell like toast.
Hey, did you know that if you smell toast or burnt oranges, no, I'm sorry, burnt toast or oranges, and there is no burnt toast or oranges in the room, did you know what that means?
No, I do not know what that means.
It could mean that you're having some kind of a brain thing. It could be like an aneurysm. It could be a stroke. There's another thing too, but that's like, you know how they have warning signs for heart attacks, you know, pain in the shoulder and all that. Yeah, if you smell oranges, always look around, because if there's no oranges, you better sit down. Seizure, that's what it is. My friend, a guy who used to work for me, sadly passed away, but he used to work for me, Brian, and he had the seizures. God, we'd be in the office working, the whole office, everything's humming, man. Sales are just bing, ding, bells are ringing, and all of a sudden Brian would stand up and he'd be talking on his headset. And that was like a warning sign when he stood up, and he was a big tall guy, and he would just go right over. He had grand mal seizures. I mean, he was able to work and functioning, but he just never knew when these things were going to come. They were really bad. I felt so sorry for him.
Yeah, that is unfortunate.
Yeah. All right, well, enough health talk. That's it for our health show. Moving on to our tech and health segment. That's it.
Yes. Yeah,
I cried about my phone. I remembered an old friend. This is quality pro. They're going to mess around and give us an Emmy someday for radio, as soon as they come up with radio Emmys. All right, buddy, I'll hit mute, and I'll be here when you're done.
Okay, and John's out in the audience already, too.
John, just give us a couple minutes, and we'll be right to you, because I got to keep it kind of short today, so that's perfect that you're here. Stand by.
Okay, here we go. Good afternoon, everyone. Today is Tuesday, the 20th day of November, 2018. Yeah. So, if you have not taken a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial. Apply.CFRN.net. If you click on that, you will eventually, you'll be brought to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, because if you don't, we don't know you took the trial. Okay, recap results. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. As I said, today's the 20th day of November, 2018. We picked up 10 ticks on crude and 12 ticks on the ES. That put us at plus 250 on the morning. Today, it took 22 minutes and 3 trades to get the goal for the day. At that point, we were up $150 a contract. And we took a total of 6 trade opportunities today. So on the month now, we're at 25.96. That's over 14 days, averaging 185 per day. That's gross. On the year, we're at 33,975. That's over 216 days, averaging 157 per day. Again, that is gross number. Okay? Okay. Let's get into what we did or didn't do. We didn't do anything with gold today. It had a couple of trade setups, one right here and one over here. This one would have been a break even. This one probably would have generated a little bit of profit. And since then, there was nothing else. There's been nothing else. It looks like it's trying to set up a short right here, but we need a pullback. Okay, the euro, we had one trade, one break-even trade right there. It looks like it did set some things up here, but it was really choppy, for the morning. It gave a long trade here that we missed. We picked that one off, and then it started going down, but it was going down into dynamic support over here, so we didn't do anything with it. And then you get into the break right here. There was a short there. And a short there. And it looks like probably a short right there. Now, this is probably going into the low of the day at the time. Maybe not. That is the low of the day right down there. That solid red line is the low of the day. And we ended up break even on that. Crude oil today. Let's see. Crude moved around a lot today, I think. But let me scroll back here. All right, we picked up 10 ticks right here. That was at 10:35, and we had even right there. Now, if we go back a little further, Bob Z, I got your email. Yeah, see, it moved around a lot this morning right in here. There was a short there that we missed, a short over here that we missed. But it was really bouncing around this morning. You know, it was like too fast to do anything with. Yeah, it was moving around so fast it kind of crammed up my charts. There was a short here. And another one here. This was during the break. Okay, another one there. And then a long right here. It really didn't go anywhere. A short here. It went down, gave a follow-up right there, a nice follow-up trade. And that was all during the break. And then it got pretty choppy in here. It did give a shorting opportunity right there. Possibly, no, nothing there. And that was it. That was it for that one. The ES was bouncing all over the place too. And it was, you know, this morning it was moving really too fast to do anything with for the most part. We did get, what did we get? 3 trades. We had 1 break even, 1 +4, and 1 +8. All right. And that's what we ended up with there on the ES. You see these highlighted areas here? Those were trade setups. And I'll show you one other thing that we suggested to our, well, to everybody that was in the room this morning, for that matter. That was the +4, and that was +8. And that was our morning on the ES. But let me just show you one other thing. This morning, I had suggested buying 2650 calls. All right. At that point, they were worth $1,925 a piece. And now, the 2650 calls are worth $2,312. So we've had about a 20% increase so far today. And typically when we're at or below the lowest weekly trading zone, either Monday or Tuesday in the week, by the end of the week, we're usually at the other end of the spectrum, usually. But I recommended those 2650 calls. They are November 30th, 2650 calls. Okay. Yeah, and so we'll go with the spreadsheet again. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 20th day of November 2018. We made 10 ticks on crude and 12 ticks on the ES. That put us at +250 on the morning. Today it took 22 minutes and 3 trades to get to the goal for the day. At that point, we're at 150, and we took a total of 6 trade opportunities. On the month now, $2,596. That's over 14 days, averaging 185 per day. On the year, $33,975. That's over 216 days, averaging 157 per day. Averaging 157 per day. If you have not taken a free trial with us, just go to the homepage here at CFRN.net. And right here on the right-hand side, it says 5-day free trial. Apply.CFRN.net. Click on that, and you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit submit, and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay. Yeah, and with that, we can pass it back out to Fabulous. Phoenix, Arizona. Yes, Gary, that is exactly why. In Studio A, overlooking South Mountain, America's largest city park. Sorry, I answered your question in the middle of my spiel. Okay. Dwayne, if you are ready to take it. When that happens, how far out do I go? Just into next week is what I did. I went to November 30th. 2650 calls. November 30th is what I did.
Did you already call for me?
I did. I did indeed. That's okay.
I'm here now. Okay, let me get the charts.
Okay. And, you know, we were below the lowest weekly trading zone this morning, so I suggested people, I don't know if you were sitting here, but I suggested people consider buying 2650 calls, November 30th ES options, and they've already gone up 20%.
20%?
Yes.
Recap of the recap.
Today it took 22 minutes and 3 trades to get to $150 per contract.
Now, I ask him that every day, guys, not because it's a race or, you know, I'm not trying to give him performance anxiety or any of that stuff. I just like to know. And I want you, what I want you to take away from it is just the sheer consistency of it. Now, not that he doesn't sometimes go, no, had a red day, had a blue day. I'm sure he just explained all that to you and what it means. So, did you?
I didn't explain red days because we haven't had any lately, knocking on wood. But a red day is a day that I didn't get the goal for the day and I ended negative. And a blue day is a day that I did get the goal for the day, but I gave it all back and ended negative. Okay, that's because I can't put the mouse away. I have to stay in there for 2 hours with you.
See, that's so true. Now, correct me if I'm right, but when you go from 2676 to 2634, that's 42 S&P points. Is that right?
It is 42 S&P points.
That's what.
That is correct.
Yep. And that works out to be about $2,000 per contract.
Yes.
Interestingly enough, guys, you've sometimes heard of a measured leg. Well, I guess this is a variation on the measured leg, because this drop yesterday from the Logic 247 entry dropped us to this week's weekly trading zone. Okay, 39 points were available, and then on this drop from 76 to the swing low at 34, another 2 grand. Now, here's the thing: you can get out at a target, you can get out at a final target, but this swing low business, you can only get out there by accident. Okay, so don't let anybody confuse you on that issue. No one knows it's the swing low until after it's the swing low. Once it's in your rearview mirror, you can go, yep, swing low. So how do we deal with this? But what do we do? Because the market isn't always so kind and generous. It doesn't always make these extended moves available. So how can we've all heard the adage, and it makes us all a little angry inside, or maybe a lot angry. Let's see, how does it go? Cut your losers short and let your winners run. Wow, sage advice. Okay, how? That's where it is. The story ends there. They tell you that's what you're supposed to do, but nobody ever tells you how to do it. Okay, I really would like to cut my losers short and let the winners run, but I don't know which is which. See, that's how they get you. Now you got to buy some books, you got to buy some tapes, you got to attend seminars, you got to fly to places you don't want to go to, maybe like Vegas. I don't know. These things happen in this world in which we live. But I'll show you this, okay? Now, before I show it to you, let me just tell you that everyone who was listening to the show yesterday or was in the live training room yesterday morning on the trial, the open house week because of Thanksgiving, who went out and did the demo with Bert and got the indicators, got the chart so they could run the indicators right along with us, they are now participating in this. They're participating. You might not be, but life, like trading, not much fun as a spectator sport. So here we go. Get a bullish cross yesterday about 8:30 a.m. Eastern, hour before the Wall Street Open. Had an interesting Globex session off the open Sunday night. Gapped lower on the open, right down to the BBC. Okay, and then we just walked it flat across. And see what the indicators do here? Over here, they're going to get you into a great opportunity, but right here, they're going to tell you to stand down, and that's what we did. We stood down all through the night until it told us to, all right, let's go fill the gap. Boom, we went and filled the gap, hit our target, trail a little bit, and then as price marched back and this step line hit the BBC and we got a red close below it, I'm like, ooh, I think we got a bullish cross coming. There it came. That changes everything. Okay, here and here we have no choice but to be bullish. Whether we think the market's oversold, overdone, half-baked, it doesn't matter, because this is blue and climbing, and this is blue and climbing, this is blue and climbing, and this is blue and climbing. So I was well supported and documented in our alert to put on a trade that would in effect close the gap on the S&P, the Dow, the Russell, and the NASDAQ, all four of them. So then here's the big game changer. We drop, we get below, bull bear cross, price gets below, bearish cross, here we go, right down to the weekly trading zone. What happens when we get to the weekly trading zone? Price starts to walk sideways, which is a precursor to the step line hanging a right turn right there, and you see the green close, this candle right here. When it closes, and it closes at a price of $26.95.50, that's your exit. You just took this from 26 past the final target all the way down to $26.95.50 to the tick, because that is our exit signal. Does it get you out the swing low? Never. Does it almost always give you more than the final target? Almost. So a $400 trade was turned into a $1,900. Well, we got to take some off. You have to do the math. 26 down to 70, because I calculated that to the swing low, but you can't get out at the swing low. Just like this swing low, it's $2,000, but you can't get out there. Now here's what you don't want to happen. Okay, this is a great example. We were selling 26.76. We got a swing low of 26.34. That's got to be 40 S&P points, right? Now, in 2 candles, we rallied 40 points. What? Yeah. You see how long it took to come down? Prices usually will fall quicker. I mean, it takes financial commitment for them to rally. So look at this. We hit the BBC. Now, what am I looking for? I'm looking for a down leg to at least challenge this leg. Okay, but back to your stop. Okay, we crossed, and really the cross that we'll give it this one, but that's right back up at your entry, right? So something you always want to do is you want to take that hard stop, and once you get beyond the target, the final target, take that hard stop and you pull it down just below, on a short trade, that final target, so that if something odd like this happens and it pops up on you, you still got out at the final target. You had a shot at a whole lot more, but you still got out at the final target, right? That'll protect you. Now I could walk you through each one of the indices and show you how the same thing has transpired, but like I said, the show's going to be a little short today, and I've already overstayed my welcome. I need to get John's mic open. If Michael's still here, could you do that, Michael?
Yep, I just did.
Thank you. Hey John, sorry to keep you waiting. Yeah, and his phone number's in the phone that went for a swim. Why does this happen to me?
That is unfortunate.
Kind of children, animals.
Just not telephones.
I mean, it looks fine. I mean, the glass isn't cracked. Looks good. All right, so John, I'll fire him a real quick email, and then I'll just go through a couple more of these trade setups. Anything you want to put out there, throw in?
Let's see. Well, no, but what did I do? I sent Valerie some information. I CC'd you on it.
Oh, good. Yeah, because there's a couple. If we could put together like a 15-20 minute, just, I don't think we need computers. We just do a little conference call and just throw a couple important things, because I know there's stuff I haven't thought about that you would think of, because you have more of that engineering mind, the nuts and bolts. You know, nope, that won't fit. That triangle will not fit in this circular hole. Oh,
That's right.
well, maybe if we talk to it, you know, that's me. Maybe we could reason with the triangle. Come on. All right. Let's send email to Sean. John. Is his mic open? And he's just
Yeah,
not
his
there?
mic is open. Yeah, it's open. He's just not there.
Okay. Open mic 911. I'll see how he responds to that. You shouldn't joke about 911. All right. Okay, so that was what happened on the S&P. Here's the Dow. John, that you? Nay? Okay. Okay. All right, so yesterday we also had a $2,000 drop on the Dow. And then last night we said, the alert said to consider selling the YM on a break of the lows, and we were speaking of these lows here and this weekly trading zone here. The actual zone right there on the Dow is 249 24920/25. 24920/25. That's what it should say. That's close enough. Anyway, these zones come out to the partners Monday morning, 6:15 a.m. Eastern. All right. So on the Dow, we already talked about the ES. On the Dow, we wanted to consider selling 24,860. Trail if possible. So 24,860. Now you can see how when price got down to 24,860, which it did about right off the London Open. My goodness, how many times have you heard me say something happened? L2, that just stands for Logic 247. Beats typing it all out. L2, sell. And the number was 24860. 24860. Okay. Now, the thing I want to, the simplicity here that I want to get across, because trading is not easy, and never will be. Can be simple, and this latest dimension that we've added on with the Logic 247, boy, I think it really completes the picture. I know my snazzy advertising slogan says everything a trader needs, one low price. Yeah, in the rearview mirror, it looks as good as it did when it was coming at me at 100 miles an hour, because you get training, you get quality software, you have instructors who are actually mentors who will spend time with you whenever you need it to help you with whatever it is you need help with. Yeah, and we do trading too. Yeah, we'll help with trading. So a lot of the sessions sometimes get sidetracked, but that's okay. It's whatever you need when you need it. And so I've really tried to think of what else could a trader possibly need. Because if you're going to make that bold statement, everything a trader needs, one low price. If you're going to say that, well, you better doggone make sure that it's everything a trader needs. Well, you already got a computer, you already got electricity, and you already got internet. Are you with me listening to this broadcast? We've given you charts and indicators and methodology and mentoring, training, much love. The largest Emini training library on the internet. I checked. More love. And now, oh, and for 3 years, the Concierge Trade Alerts, which I've recapped on this show every single day for 3 years. And you can go to youtube.com/CFRN and actually watch some. You go back 2 years and watch a recap of the Concierge Trade Alert. Did on a show every day, all those years. But as you know, we're in our 15th week of our new product, Logic 247. And it's innovative, it's exciting, it's trying to keep pace with the world in which we live. Concierge Trade Alerts, well, I'll recap those. Not today, tomorrow, because I got to keep it short today. But every time I recap them, the results are, and it's not because we're using some kind of trick. You know, we didn't outsmart the market. No, we just got a little glimpse of how the market works. And so all we're doing is using our indicators to go in and find the underlying rhythm of any market, any time frame, and just go along for a ride, long enough to meet our humble goal. Hey, John, is that you? That is you, John. All right. So the Logic 247 is available standalone, as is CFRN Partner, and then there's the Passport. That's really where that slogan belongs. Everything a trader needs, one low price. Now, if you think of something that you need that's not a part of the Passport, please come see me in Telegram or send me an email. support@cfrn.net. Okay? That's important, because I want to know. If I'm going to say that, everything a trader needs. Training. Learn how to trade. See, that was our foundational principle. If you want to be a trader, well, by golly, you got to learn how to trade. And that doesn't mean learning some smooth trick that, you know, is working this week, but who knows about next week. John, is that you?
No, that was me.
All right.
Yeah, I don't know if John's going to make it.
Do you have? No, he's there. He just laid his headset down and he's got busy. You know what I need? I need one of those little. I need to tell everybody in the audience, cover your ears, okay? Turn down your speakers, and then I need to blow one of those little air horns. He would hear that coming up out of his headphones, and he would go,
"Yeah, probably."
Oh yeah,
probably.
The radio. Okay, all right. So, We had a free trial this week, or we're having a free trial at Open House. Hope you've taken advantage of that. I'll probably have a webinar after the close of the market Wednesday afternoon, and I might throw a pop-up sale. You know, that happens sometimes pre-holiday. I get all festive and stuff. So if you've been thinking, if you've been turning it over, if you've been looking at it, now you may have noticed since the last pop-up sale that the price gradually creeps up, right? But because of the holiday, I'm not gonna let it creep this time. But we'll only let a few go at that price. Okay, so it's the digital product. It's not because we don't have more. It's just a thing. We're only going to sell a certain number at that price, and then after that, you got to pay the price. So I hope you come to the webinar Wednesday. It's 4 p.m. and I don't have a link yet because I just decided to do it. But by golly, by the time I see you tomorrow, I'll have it. Okay, so don't worry, you won't get left out. We'll email it out to our list so a couple more people can unsubscribe. I always like to see who that shakes out of the tree, don't you, Michael?
The comments is
I
what I
don't
like
even
to
read,
see.
oh no, God, I don't even read the comments anymore. I don't even read the comments anymore. I stopped about, I don't know, because they just infuriated me. And I would sit down and I would write these. People said, you know, hey, don't email me no more, and then some snarky comment. So I'd sit there for 2 hours pounding out this very eloquent rebuttal to their foolishness, and then realize, you know, you shouldn't send this because he said don't email me anymore. Snarky comment. So I'm not going to say if I ever emailed one or not, but if you've never been in the chair and had to deal with that stuff, it's who was I talking to the other day? They were experiencing a similar issue. I forget. Okay. Did you see Leroy's email?
Yep, I'm responding to it right now.
Because see now, do you think he'll go out and get a? Do you think he'll go get a Logic 247 tattoo? Do you think he will?
I doubt that.
I don't know. You know, you don't really know Leroy.
I don't.
See, he may be a man given to the ink, and once he finds out the power of being able to keep his day job and use the Logic 247.
Yes, that is John out there
Gloves
now.
are off. Hey, John, welcome to the show.
Hi there. Hi. Hello, Mike.
Hello.
Happy Thanksgiving when it comes.
Yes, yes.
Thank you.
Pre-Thanksgiving. You know, we put in some ways, we kind of made a pretty valiant effort to put in a bottom this morning. And it's very tricky because, you know, I was kind of thinking that the bottom might come in at about 10:30, and it really came in kind of on the opening for a lot of stocks like NVIDIA.
Bottom, John. I think this could be. I think this could be the bottom. I mean, we're going to come back. We're going to come back to test it, but I think it might.
Yeah, no. I think it's kind of a look. When you look at the leading stocks, especially the Nasdaq, you know, you look at NVIDIA. It opened at 133. It's currently at 149. I mean, you know, this is a totally different view of the market, complete. You know, in terms of a single stock, and that's somewhat replicated among Amazon and a lot of the leaders. I mean, Amazon opened at about 14.30. It's at 15.10 right now. So I just kind of put out a buy on the market right here just a minute ago as I was coming on. What we did, we got kind of lucky. We took a shot of the open. It was weird because even though the stocks were rallying, the indices went down and made a new low. We covered and reversed on that low. And then we went up,
go ahead and get that if you need to.
Yeah, and then we rallied pretty well. You know, in fact the semiconductors. Hold on a sec.
All right. Okay, this zone that I just put on, guys, normally I don't put these out till Thursday to the general community, but partners get them, passport holders get them Monday mornings at 6:15 a.m. Eastern. This is
so you know, one of the things that was a little bit of a worry this morning was the breadth, which is currently breaking down again. The breadth was about, you know, about equal to where it was in the first really bad down day we had a while back, and that's not a particularly encouraging sign for a major reversal today. Although, you know, we didn't make new lows on the breadth. It's hard to see because I don't remember the exact number, but it was around minus 2,200, something like that. And right now we're minus 2,000 after being kind of minus like 1,300 or something a while back. So, you know, we've kind of had a second wave down, but it is, look, as I pointed out with Amazon, you know, most of the leaders, except perhaps for Apple and Facebook, are well off the lows. And you have to consider that to be a, you know, leadership by the, you know, by the traditional leaders out there that have led us higher. So the fact that they're turning today is encouraging, and it sort of bodes well for later today. Problem is the Dow's down 500. It's a hard number to come back from. But if you remember the last time this happened, we didn't, you know, we didn't go positive on the day. We had a late rally, and I think there's a possibility you could have another late rally today. You know, in fact, we're sitting right on your weekly trading zone right now, which is an interesting point from which we could actually rally.
Yeah.
And actually it could go crazy, because if we get above that 2670, I mean, we could be back to 2690 before you know it. And we're either going to get there today, tomorrow, or Friday. I'm pretty sure of that. It's very unusual. You know, I mean, in all honesty, I wouldn't be surprised if we're 500 points higher by the end of the week. That
John,
would be the
you know
equivalent.
what? We just looked at options this morning. Michael did. Michael, you still there? Michael? Oh, he must be on the phone. Yeah, what we do is whenever price hits the lowest weekly trading zone by Tuesday morning in the live trading room, or if it hits the highest weekly trading zone by Tuesday morning in the live trading room, we look for options to take us the opposite direction the rest of the week across the chart. And so that's just what they did this morning. And those options, at one point, they were up 20% already.
Yeah, and that's an interesting point.
I wish he popped back in so he could tell you which. He told the audience a minute ago. Hey, anybody in the audience, if you remember what Michael said, which contracts, I'd like to tell John so he can look at it. Go ahead.
Yeah, no, thanks. No, I think that's a very good idea. And look, it's, I mean, it's just the way the world works. I mean, look, even though you know, look, we're setting up for a kind of a perfect bottom. Hold on.
Hey, Gary, thank you very much. John, Gary said they were November 30th, 2650 calls.
Okay. Okay, that's a pretty good strike. Yeah, that would get you a lot of points if that goes up to 2690 or higher. I think this market's headed for.
I think we go 20.
You know, a week from today, Dwayne, this market could be at 2720 to 2750. In all honesty,
yes.
I think there's going to be a monster rally. You know, Art Laffer was on this morning. I just caught a little bit of the
daily chart, John, right now.
Yeah.
This is the last leg up. We just punched through that 62, so we may. You know, I just talked about this at the beginning of the show, and when I taught on Friday, I said, if we take out this low, then there's a good chance that we're going to come down right here, and then we'll get close to this low, but I don't think we'll touch it because early buyers will swarm in because they want to run it up again.
Well, timing-wise, we're probably running out of time, but you can never say never. You know, look, it's either going to hold right about here, or if it fails, we'd break down to about 26, 25 or somewhere like that, and then we could really roar higher, and that would be very similar to the 2016 bottom actually.
Now,
I think
once we get back above this little double top right here, John, look at this. We got 100 points of just clear blue sky.
Yeah, no, absolutely. And I got a good friend who's a very smart guy. He's has a big client base, and he was telling me a long time ago. When we were rallying a year ago. Remember what it was like a year ago going into Thanksgiving? Was awesome. And he said, boy, this market pulls back just one time, everybody's going to be diving in. We're getting close to that point, but look, the Reagan tax cut when it came in it really, I mean, in a lot of ways, it set the stage for the bull market in the 90s. And really, from the day it was announced, it went roaring higher, and then it had the 87 crash, and then the market continued higher after that. So even though we're having a kind of a correction right now because of the midterms and because of a whole lot of other anxieties, they're fairly short-lived, and really at the end of the day, it's the economy, stupid. It's what the economy is going to do going forward. And if we have a kind of a Goldilocks economy where we do 2.5–3%, for the next year, if we maintain around a 3%, that's as good as it gets for the U.S. economy. And as Art Laffer was saying this morning, and this is a former advisor to Reagan, he's the architect of the tax cut for Reagan. People don't realize that these tax cuts, these major policy changes, last for a long time, and it's not inconceivable that they will get a tax cut for the middle class in this era that we're entering into right now, with the Democrats, and that would be epic if we can do that. Then the economy would absolutely soar into the 2020s, and I think that the Fed actually are going to ease off on things rate wise. The big surprise, if they didn't raise rates in December, that could create a huge rally into the end of the year and into January. So but you cannot, this market has so much power, so much upward power, that, and we've really had a kind of a year-long correction effectively. What's going on here. We finally, look, the chart we're looking at right now.
Yeah, no, this John, this goes back to 2015. So we got 3 years.
Right. This is a classic three-wave. Look, I'll lay it out for you fairly simply. There was a John Murphy from who's a legend in his own time. Met him a few times myself. He's on this stockcharts.com. If you're a subscriber, you get alerts from him, and he's calling, what everybody doesn't understand about Elliott wave is he's calling this 1-2 from January 16 to September 16. It's not a 1-2, it's a double 1-2, right? That's very, very important. It might even be a triple 1-2, because that's September. Today, by the way, is a lot like September. You see that first break? That was a 1,000-point down day, and how we reversed upward that day. Imagine looking at the chart we're looking at right now. Imagine what happens if we get just above 27 today, right? Or something like that. So I know we're looking on a weekly right now, but so this is a double 1-2. We had a very, very powerful extended third wave, which up here, right? And we've had we had the first ABC, then that's an A wave, then we had a B wave to new highs. I can't tell you how bullish that is. A B wave to new highs is just incredibly bullish. This is a C wave, so it's, it happened very suddenly, and there is a potential for one final washout down to this 2,500 level. Could happen, but given that we went higher, we've kind of satisfied they're about equidistant. In other words, the correction in January to the correction here is about the same, because it's coming from a higher level. So potentially we're set for what could be an eruption to the upside to take us up to 3,300 or maybe even higher, maybe even 3,500 on the S&P, because we're going to go into a fifth wave, and it's going to be like enormous, similar size of this, similar, you know, of the up move last year. Now, the reason why I'm pointing out this B wave going higher here is this is a micro version of what happened from 2000. Imagine if January 18 is 2000, we dipped down into 2002, 3, then we rallied up to 2007, crashed down to 2009. So right now, at the moment, we're kind of making a bottom in a micro sense of what happened in 2009. And the big surprise after 2009, which nobody saw coming, was a huge rally that took us all the way to where we are today. So, you know, I wouldn't underestimate the power of this by any means. And the big thing is the world markets are bottoming. They've already bottomed. They're not making lower lows today. That's a classic setup for a US bottom. And I think that, you know, once, you know, the fourth quarter, the fourth quarter earnings are probably going to be very good for most of these companies. They were, remember, most of the earnings in the third quarter were fantastic. You know, they were 85% better than expected or something, some crazy number that's never happened before. And the only reason the market's correcting is because they gave guidance, you know, they were worried about this or that. That has caused this correction. What are they really doing when they say that? They're kind of setting us up for the next up move, because they're probably going to beat expectations in the next round of earnings. Think about that.
I think you're right.
Yeah. Yeah. So, you know, I think, look, you know, the market always gives you a second chance. If you missed out, this was a very hard rally to pick this one up to the recent highs. And, you know, I think the next rally is going to be much more like last year, where it's just kind of buy and hold, you know, you just buy and just, you know, this is giving you a re-entry point here for what's likely to be. Remember, the third year of a presidential election traditionally is a very, very bullish year. It should be, you know, 20–30% upside in the market. We've been cheated out of it the last two third years because Obama was in charge, and he didn't have the, you know, all the things going for him. You know, look, he had a lot of issues running against him, including himself. So by the way, he's out there calling Trump a racist. Can you believe it? I mean, Obama is like the pot calling the kettle black.
Unbelievable.
You know, I mean, it really is. I mean, between him and Don Lemon, it's hard to find anybody more racist out there. You know, it's unbelievable.
John, you see that little rectangle I just drew there on the chart?
What's that?
That little rectangle I drew on that chart.
Yeah, right.
On the weekly, I see price coming down to rest in there, and I think we find some pretty good support there. Now, here's what I do think. I think it could get. Look at the wicks on the preceding candles. I think it could get really violent and choppy in there. I'm not saying we come down and take off like a rocket. You know, we could bounce around in there, and depending upon if you're a trader or an investor. If you're a trader, it'll be good. If you're an investor, you just hang on, because it's coming back. You know, we're going to put in a new all-time high. I have no doubt.
Yeah.
I'm not predicting it today, tomorrow, next week, or next year. I'm just saying there'll come a day when we trade at a higher price than this market.
You know, we didn't have a you know, when this market was probably not going to top out until everybody's bullish and everybody's, you know, look, the one thing about this market and the momentum that's in it, and remember, you know, the fundamentals that are driving this market are still there. You know, the deregulation, the economic momentum, the tightness of the market, the fact that employment is as low as it is, still, you know, 1 million more jobs need to be filled and are there. I mean, there's just so many things going for this market. It's just incredible.
Yeah, but
however, listen, I want to tell you something. I want to tell you something.
The blue wave. Go ahead.
Yeah, I want to tell you something really powerful. You know, most bull markets are driven by a big theme. You know, like in the 90s, it was the internet, the early days of the internet, right? The big theme that everybody's missing right now is we're just kind of getting into the what do they call it, the Internet of Everything, where everything starts being connected. You know, you got more and more sensors monitoring everything, and cars, the integration of the car to the internet, and automation. I mean, we've got the flying cars coming, we've got the jetpacks and all the rest of it. All of these things are in the embryonic stages. You know, so hypersonic transport. There's just a world of things that are coming that are just going to be absolutely mind-boggling. And the sort of immediate driver is the I mean, you got Apple, you know, downgrading or downplaying its phone sales, right? It's kind of at the end of the cycle for Apple. They've just about reached, you know, perfection in terms of phones. So they need what's going to render all these Apple phones obsolete is going to be the advent of 5G. And the advent of 5G is going to disrupt the world in a way you can't even think about today, because it's you know, it's not 100 times faster, it's about 1,000 times faster than current speeds. And that is going to usher in all kinds of things that are going to be just, and everybody's going to want speed. Everybody's going to want to upgrade to 5G, you know, almost immediately. So there's a whole new phone cycle coming, and this is going to be the big driver. And all this gear, you know, Cisco systems and Microsoft and the cloud and all these things that are supporting this meteoric growth in the mobile space is going to get a tremendous shot in the arm here in the next couple of years. Yeah, I think you're right. And the semiconductors are going to be the big winners too. Now, why is I saw a headline that Europe suddenly is going to be a huge demand out of Europe for EV, electric vehicles, and the batteries, and I guess the lithium that goes along with those batteries. Yeah. Why is that? What's happening? Is there some new? Well, I think you know look, gasoline is really expensive in Europe, and there's a tremendous motivation to get off gasoline, you know, because it's just so expensive to drive anywhere. And I mean, I know the cars are getting more efficient, but still, it's kind of you know, I think the electric car is more appealing over there, and if they do subsidize them, then it really gives them a boost. So and let's face it, the electric cars are getting better and better, and that's part of the, you know, I don't think, look, you know, there's still you know, they don't have the infrastructure in place yet for charging and things like that. It's going to take a few years. And in spite of the electric car, the gasoline thing is, you know, people are saying it's going to go on into the next, you know, to the 40s or 50s. So, you know, it's not going to change overnight, but the electric car will become more dominant in time. Listen, I gotta duck out for a minute. I'll be back. All right, John. Okay, guys. Let's jump back to this real quick. Because I told you I had to keep it. So see this, I just wanted, the reason I brought this up was just to point out, in the grand scheme of things, okay, if we step back a couple years to 2016, fast forward a couple years, 2018, 2 years, we've did all this, and now we're pulling back to here. And if we don't go any lower than this, that means we've put in a higher low, and that's a good thing, and that brings about another leg. Where could this thing go? Well, based on purely the mathematics of your question, no secrets that were found in an urn in a cave in the desert somewhere. No, none of that. Just math. But math's good. Fibonacci. If you didn't make it to the Fibonacci webinar, go to youtube.com/CFRN. Fibs made simple. I hope I made them simple. I tried. According to Fibonacci, a 12th century math nerd, if we can take out
double top here, we could see 30.50, 31.85, 31.80, 85, and 33.50. What? 37.68. Now we're looking at a weekly chart. So now you got to think about how long will it take for there to be enough weekly candles to boost this thing all the way up there. It'll take some time, suffice it to say. Right? All right. Okay. Well, here's the deal. I got to run. Short show. I know. We've had a great day. And it looks like it may be about to get a little better. So let me get back to the channel. If you need me for anything, hit me up in Telegram, send me an email, support@cfrn.net. As you start calling the toll-free number 833-464-6393, also known as 833 In God We Trust. Okay. Or if you call the old number 949-423-6464, when a lovely lady's voice answers the phone, don't think you have the wrong number. You've got the right place. CT Global Media, home of CFRN and all the great shows. Yep, this is us. And that's Valerie. And say hi. All right? And she will route your call. She'll handle your call in a far more efficient manner than Michael and I ever did. But if it entails Michael and I having to do something to take care of your call, she'll make sure we do it. It is so nice to have a grown-up in the room. Huh. All right, that's it. I got to run. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.